Hi Dan, it's Trevor.
Morning, Trevor.
Morning.
Oh, I'm echoing at your end.
Echo.
I am. It's okay, no problem. I'll just make you the presenter and I'll stop talking. Okie dokie. You have the power. You should be able to show your screen now. Yes, we're looking at the RRG.
Okay.
Cryptos.
Let's look at the euro.
Mm-hmm. Okie dokie.
Are you seeing the euro now?
Yes, Euro USD weekly.
Yeah. Okay. That's where we'll start.
Okay, well, I make it about a minute too, so let's give clients some more time to arrive. A few more seconds before we kick off. Okay, I make it 9. Literally a few seconds.
Yeah.
Oh, okay, let's get started. So hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you all for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel and I'll pass those on to him. We remind you that this webinar will be posted to our YouTube channel in a few hours or so time. So if you'd like to watch it again, you can do so there. And we'd love it if you'd also subscribe to our channel and click on the bell to get notified. The handouts for today's webinar can be downloaded from the handouts tab of the GoToWebinar control panel. If you're having any problems locating or downloading them, please let me know and I'll send you a link. The first is a guide to the different technical terms and indicators that Trevor uses during the webinar. And the second is a CFD guide, which explains all the different products that we offer at FXChoice and all their specifications. If you're watching this on YouTube, these handouts will be available in the description box. So please click show more and you'll be able to see them just below the video. For those of you who don't know Trevor, he's very experienced technical analyst and trader. He's over 40 years of experience, was former global head of technical analysis at Bloomberg. So we're in safe hands, I think, today. Trevor, over to you.
Okay. Thanks very much, Dan, and welcome everybody. Quite a lot of interesting things, big things happening at the moment. So let us first of all start off with the relative rotation graph of the G10 currencies versus the dollar. I think most of you on the call will probably be familiar with this, but in brief, here we have the relative performance of currencies versus the US dollar. The US dollar is a crosshair in the middle here. Everything which is on the left of it here is underperforming the dollar. So the yen is overperforming the dollar and the Norwegian crown is the weakest of the G10 currencies versus the dollar. On the vertical axis here, it's with positive momentum. And so we've got most of the currencies weaker than the dollar, but with some positive momentum. The tails on here are samples from Friday, and then this dot is Thursday, Wednesday, Tuesday, Monday. So it's the last week. So we can see, for example, let's zoom in here on the Canadian dollar. The Canadian dollar has flipped around during the week and then come up here and then in fact backed off here. The euro was strengthening in the improving quadrant, but has backed off from that now. The strongest of the underperforming currencies is the Swiss franc, but only the yen is outperforming the dollar. Okay, that's the background picture. So how does that look on the individual charts? The dollar itself is really approaching very important resistance levels as measured by the dollar index from April 21 and April 20. It's been very, very strong, but it is approaching resistance levels. So, but here, this is starting off with a weekly chart of the euro dollar. We've got advance, pullback, advance, pullback, advance, not to the same high as before, and then a pullback. And this should remind us technical analysts of potential head and shoulders. Big pattern, but we've got a high, higher high, lower high, bearish divergence from the left shoulder to the head in both the RSI and the MACD. This is big picture talk, but we're right on the neckline. Now, if it were to break down, I'm not saying it is going to break down, but if it were to break down, the distance from the head to the neckline is 7 big figures. So we would be subtracting, sorry, 6 big figures. We would be subtracting 6 big figures from the break point. Let's say the break point is 117, and that would take us down to 111, which is right into this big support area. So from a chart perspective, this is a real and present threat. On the daily chart, here we are approaching that neckline. So what is the picture at this time? So the action, I'll just zoom in a little bit. I think we're just looking at a bit too much data there to make it clear. So with easing back, we are below the 20-day average, below the 50-day average. We're above the 200-day average, but it's drifting and testing lows. The ADX is at 40. That's a very high reading. That means the trend, which is down, is strong. The RSI is at 38. It's come up from below here, and it's got a bit of a bullish divergence. I don't know how well you can see it. Perhaps I do need to put a little bit more data on there. Let's put 3 months on. So low, lower low, low, higher low on the RSI, and the RSI is lifting here. So we've got loss of downside momentum as we approach the long-term neckline, indicating that it's going to struggle to make the break. You know, if it started to if it increased its downward momentum, then you'd feel fairly confident it was going to break. The MACD on the daily chart is also positive as well. So I think, you know, we're at a very dangerous point, but it does not look as though it's going to make the break at the moment anyway. It's a pretty profound break if it does happen. So watch for the level for signs of weakness, big black candle, anything like that, any shocking bad news could tip us over the neckline, and the market could start to tumble. You could use the RSI rising trend line as your trigger for that message. In the meantime, in the short term, it looks much more likely we're going to steady up a bit and look for relief, pressure relief, if we break the 118.80 level, and the pressure is right off if we break the 1975 level. So we have got this downtrend line in play here, which would be about 1825, the downtrend line there. So I think I've said it clearly enough. Enormous threat from a big head and shoulders pattern, potentially 6 big figure fall if we break that, and we're on the point. However, the shorter term analysis has gone a bit bullish at this point, and we've got loss of momentum on the drop, and it looks more likely to bounce at this point. It may be postponed breakdown, I'm not sure, but it's a dangerous pace, but it doesn't look as though it's going to happen right. Moving to the pound. So the pound has also got a threat. Let's go to the weekly chart here. It's a double top threat, not a head and shoulders. So we've got high, the same high, and we flirted last week with breaking, but it rejected the breakdown. We finished above the breakdown level of the pullback in between the two highs, so it held. If we do break that level, I'll draw it in here properly. If we do break that level, we come to support at around 133 quite quickly. So, you know, 3 cents there would be where we'd be vulnerable to the drop. So not as big as the drop potentially in the euro. The MACD is negative. The RSI is negative on a weekly chart. So it's all pretty threatening. However, once again, we've got loss of momentum on the drop. We've got a low, lower low, lower low, and the RSI, low, higher low in the RSI. Loss of downside momentum as we approach the very powerful, important double top breakdown level. So it does look as though it's the same story here. We're at a very threatening point, which looks like it won't break now. may break later, or it may indeed bounce. If we're going to bounce here, the triggers for it are 139 and 140, resistance starting at 141 area up to 250 area up here. Quite strong resistance there. So I think the present and near and present threat is definitely here. We're very close to it. So any sort of bad news could tip us through it. But at the moment, it doesn't look as though it's ready to make that break yet. Now, what is? Let's go over to this left-hand side of the underperformance and the commodity currencies first. So Canadian dollar, which has been such a sort of wonderful pivotal currency of the best way to get outperformance of the US dollar for a while, and then now to get underperformance of the US dollar. So this rising here is rising US dollar and therefore weakening Canadian dollar. So here's the weekly chart. So there was that overperformance of the Canadian dollar, a long trend, 2-year trend broken. Now we've had this, I called it a cup and handle pattern, quite an unusual one to see, but often very significant low is put in with that. 120 was the level. Here is the cup, here is the handle. Here we're making the big moves that follows it. We talked about this, so we were well ready for that. It's taken out, obviously, the trend line. The MACD is positive here. The RSI is also positive here, and we're going into resistance levels. So we're moving up strongly here. The cup and handle is beginning to fulfill its objectives. We did have a little bit of a pullback here, but I think it's picking up support again. Probably this week, the dollar will steady and the Canadian dollar will weaken. Remember, we had the right over here, the Canadian dollar, and then further to the left, we've got the Australian dollar. So it's a little bit further to the left. They are moving in tandem this time. They didn't before, did they? You know, that strength was uniquely in the Canadian dollar and not in the Australian dollar. So now we've got the Australian dollar also weak. And so let's look at the weekly chart here and breaking down shoulder, head, shoulder, neck breakdown. And this has already completed the objective from the head to the neckline, measured down, more or less completed, and come down to a very significant support level from Q3 and Q4 of last year. And so if you like, the potential on the downside here is probably almost fulfilled. Everything is bearish. I mean, the RSI is coming down, the weekly MACD is coming down, but this is very close to very significant support. So to me, it's not particularly attractive. I prefer the Canadian dollar of the two. However, it is weak, that is for sure. Now, over furthest to the left was the Norwegian crown. And so let's have a look at that one. So the weakest performer versus the US dollar is, and here it is, rising here is weakness in the Norwegian crown. RSI is rising, weekly MACD is very positive, and crucially, it's broken this 1.80 level, and that was a very significant support level, therefore became a resistance level, but we're punching into it. We do look as though we can go further in this. Resistance intensifies at 930, but that's still well above us here. So here we are going up here, which is down in the Norwegian crown. The MACD is positive on the daily. The RSI is also positive on the daily. We just had a dip and a turnaround. I think that's another one of those completed, and we'll make another swing to a new high here. So pull back, RSI pulling back, and then going up. It's quite strong dollar here, weak. So this is a good one, if you like, and it's still got more potential to go. All right, well, let's go to the big market, the cryptos. Now, let's look at the RRG for the cryptos first. Now, still underperforming the dollar. So here we've got Bitcoin, Ethereum, and Litecoin. Bitcoin and Ethereum are both in the improving quadrant, whereas the Litecoin is in the weak quadrant. And there is quite a strong message about that in the charts. You've got nearest to the crosshair Bitcoin, then Ethereum, then Litecoin, and that's the order of attractiveness of these three cryptos. These two are very clearly heading northeast. That means heading east means they're improving in their relative performance to the US dollar, north with positive momentum. So that's a very good message to have, early stages message of a bull run. So what does it translate on the absolute chart? So we've had a big breakout, haven't we, on today? We had a descending triangle. I did call it a descending triangle. We had these three lows. This is the weekly chart here. Three lows and then these lower highs here. Descending triangles normally break to the downside. Clearly not the case this time. It's broken to the upside, not to the downside, but normally they do. That's why I got ready by saying if we broke through this 29,000 level, we should go down to 20, but we didn't. We broke up, and we broke up in great style actually. Powerful move up here. Now we're reaching resistance of 40,000. That's a key number, psychological, and also the high here. The RSI is positive, the MACD is positive. I mean, this is quite a big message here, and clearing 40,000 will mean that the journey up after that will be relatively friction free up to about 55,000 here. So we could have quite a big jump, quite speedy, if we can clear that 4,000 level. This is a pretty attractive chart. Now, one of the other things I wanted to show you was the extent of the pullback that we had here. So if I start measuring from here, I'll call it the beginning of the move back in March 2020, up to the high and the pullback. It wasn't a Fibonacci retracement level, but it was a pullback of around 60%. Not some will call it 60%. More than 50%, but not 61.8%. But remember that, how big was the fall? So this was how far it went up when the bulls were in control. This is how far it went down when the bears were in control, around 60%. Now let's go to Ethereum. And with Ethereum, it went clearly to 61.8%. So it went further. This means the bears are stronger than they are in Bitcoin. And this reflects also in the chart. The weekly MACD is still positive. The RSI is flattened out. It's a rather neutral message, but we've also had a breakout to the upside here. So looking at the daily chart here, descending triangle, I had thought it was going to be. Threat was to the downside, the break of 1,800. Well, it didn't. It broke the upper side of the triangle, the declining high side of the triangle, and confirmed it very clearly this morning here, but not as emphatically as Bitcoin. Here we've got resistance at 2,400, more resistance levels in the way here, which will make it kind of harder for this. There's more friction in the journey up. The equivalent of 40,000 on the Bitcoin is 2,800, and then that will release energy if we get there up to the 4,000 area here. But at the moment, I see much more drag on this one, and this is really shown by the extent of the pullback. This is one of the advantages of Fibonacci retracement. It's not Fibonacci and the magic and the mystery of the numbers. It's how big was the pullback. The bigger the pullback, the stronger the bears are. Then when it starts to rally, the ones where the bears were weakest is the one that's going to lead the advance. Now the Litecoin, I'm going to the weekly chart. The pullback here is 61.8. We fell back about 75% of the advance here. The bears were really strong in this one. It's it's going to be hard to go up. There are many, many sellers. So we've got the bearish MACD here, and we've got a very weak RSI still. And then now we have, as with the others, broken up, but this is the mildest one of all. It's hardly a strong breakout here. Deep breaking out of the upper side of the triangles, again, slightly unusual, but we've got lots of resistance, 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 lots and lots of it to get through. It's a quagmire of resistance. So the clear message I'm trying to say to you here, as revealed by the RRG, where you've got the most northeasterly and furthest to the right message, is Bitcoin. Bitcoin is the preferable one of the three. And really look at this, how close we are and how little resistance there is before we get back to this area here, where the fall was very fast and therefore representing not strong resistance. So of the three, there's a clear favorite if you want to be bullish of the market. Moving now to the precious metals. On gold, the gold fell 61.8, so from here to here, 61.8. Now bounce from it and you know and moving higher. It is it's generally bullish, you know, low, higher, low, higher, low. The MACD is not a very strong message. The weekly MACD is a very neutral message, and it has formed its own triangular pattern here. We've got the lower highs in here. We're close to testing this downtrend line here, which would be, let's say, 118.20. Break of that, break of 118.25 here should release some energy up for a retest of the 1880 level there. Low resistance from this very fast move down here. And it is looking constructive. The MACD is positive. The RSI come back to 50, so corrected and now turning up again. That's also a constructive message. So it looks like it's stabilizing, getting ready potentially to start another leg lower. We always look at this stage at the gold-silver ratio to make sure we're in the right one. Well, we are really. So this is gold versus silver. Going up here means gold is preferable to silver. We had a pullback on it, but it's starting to go up again. So, you know, that pullback seems to be over, and we should be resuming the outperformance of silver versus gold. We are going to move. We're going to move to the stock markets in a minute, but at this point, let's just review that gold versus the S&P, which is very threatening indeed. You know, we're continuing to drift. Each week I show you this extremely long-term chart because I want to keep in the chart the 2007 low here, which is now really, we can say, being broken. Likewise, also the 2014 low. So we're resuming this state that we had between 2011 to 2018 of outperformance of the stock market versus gold. We had a correction between 2018 and 20, but now it's resumed again. If you like, normality has been resumed. It's better to be in the stock market than in gold. But before we do that, let's finish with the commodity and look at the amazing movement that we had on crude oil. What a week we had. Let's look at the weekly chart to get this all in perspective. It doesn't look like much, but this shadow here was very dramatic. We dropped from a consolidation, which had formed here. I'll show you that on the weekly chart. We had seen the bearish divergence here, high, higher, high, and so that was a warning. Also on the MACD as well. And so there was a warning. There was a savage sell-off to this support at $70. So plummet. So it's hard to believe that's all in 1 week, Monday, Tuesday, Wednesday. Plummet on Monday, stopped at the big support level, which I've given it a cigar, that one there. And then, equally dramatically, over the next 2 days, shot back up to the resistance level, where it's got another cigar in there. And that's where we are now. Now, it's flip-flop between the two cigars, the resistance here and the support here. And then this morning seems to be being rebuffed from it. The pattern in the RSI is a bit negative. The MACD is negative here. And so it does look as though it's likely to actually have some sort of consolidation in between those two levels. But it's very important to remember where this is all going on. This is, let me bring this chart in. I do bring it in each time, but just to remind you where we are here. We're testing these this level. I thought we had very much cleared the 75 area, but now we've turned back, and that proved to be resistant. So it's the 75 area that's resistant, and then the 85 area, and then a clear shot to probably 100 at least there. But we were warned, by those weekly divergences. So it's all going on at very important multi-year resistance levels, so no surprise we've got this movement, very, very dramatic, forming that consolidation, moving quickly out of it, forming another one, then flipping between the two, and it does look as though we're going to have another flip down between the two while it congests and consolidates even more at this important level. Now moving to the indices. Any questions so far? And please ask any questions. Anything I've missed out and your favorite thing, anything like that, put it in. Any questions and anything you think I got wrong. I'm not definitely not God, so I can get it wrong, or something I missed technically. I'd be pleased to hear from you.
No questions so far, Trevor, but we do appeal for any questions. If you do have anything, please feel free to ask them. Trevor's dying to answer your questions.
Yes, I like questions. Okay, now let's look at the stock indices. Here, well, we've got quite a mixed picture in here, but we'll go through them roughly in order: the S&P, the Tech 100, and then the European ones, and then Japan. But there's a sort of picture developing here. So in the S&P, well, we made a new high in the S&P. Here we are on the daily chart. Here's the weekly chart. Here's a little kind of a blip here, which you can hardly see. I've got a 10-year chart on that. It's a bit too big picture. But we had a blip last week, but everybody's used to buying the dips now, and so they bought the dips very greedily. It didn't last for very long, and then next thing we were making new highs. Here we go again. That's exactly what happens. The RSI is losing momentum on this advance. The MACD is too. There are warning signals there, but we are at new highs. So the previous high becomes support for the market. So that's at, we'll call it 4,400. The RSI is positive. The MACD is crossing to the upside. The ADX is still quite low. It's at 17, reflecting this general flatness that we developed here. So 17, just remember that number. The ADX, the trend is up, and the ADX is at 17. So let's compare that to the Tech 100. So we got the same picture here, new high. The previous high now becomes support for the market. So that's at 15,000, a round number there. The market fell off. Traders was, oh, thank goodness, gave us the opportunity to buy. They bought it, and we shot up and made the new high. The MACD is crossing. The RSI is extremely good. And just to remind you, on the weekly, we're positive here, and the RSI is extremely positive here. And so we've got this big outside candle on the weekly basis there. It's strong, however. But what have we got? The RSI here is at 26, higher than it was for the S&P, which was the US 500. That was at 17. So this has got a stronger trend. So of the two, both of them are going up, but the stronger trend is in the Nasdaq. So this is telling us what we know. With the tech stocks have come back as to being as a much more of a unit rather than being diversified, some going up, some going down. They're all going up, and they're leading the stock market up. The tech 100 is the better security to be long of than the S&P. Now let's have a look at the FTSE. Now we've always had a problem with the FTSE, haven't we, because of this weekly big consolidation up here, which extends out for a couple of years on the left-hand side here. We've come up to it and we've stopped at it. That was always something that we thought was likely to happen. This has got an MACD, which is weekly MACD, which is negative. This is not in an uptrend at all. It's actually in a downtrend. The RSI has dripped off here. On the daily chart, we broke down from this consolidation. We've rallied. But this looks like this rally will not follow through and make new highs. It will fail. So this resistance looks very strong, just above where we are now. Not surprised to see the weakness in the FTSE today, while we've got strength in the US. The ADX here is very high, 30, but that's not because it's bullish. It's because it's bearish. This is a strong downtrend that it is telling us about here. This is a very unattractive index at the moment. Strong trend down. Looking now at the DE30, we've got a similar sort of picture, but and that we've got consolidation. We had a breakdown, but this is punched quite hard into it. Let's get the weekly context for this. So we powered ahead here. It is at new highs. So the FTSE, you remember, has got a big resistance level to the left and above the current price. Here we're above this equivalent resistance of earlier 2020 and earlier. That becomes support, therefore. We've lost a lot of momentum. The MACD has gone down, the MACD has gone down, and the RSI has gone down. So we have flattened out and lost a lot of power. On the daily, the MACD is just about to cross, it looks like. The RSI is about 50, is a neutral message inside this consolidation here. Most likely, the consolidation is going to stifle this advance. But we're very close to the highs here. This can break out to the upside quite easily and quickly. The MACD on the weekly is down. The ADX is 26. So it's not as high as 30, but this is not a good market. That's what I'm saying. If you like, the FTSE is worse, but this is not as good. There's a clear place to be, and that's in the US and particularly the Tech 100. And lastly, let's look at the Japan market. Now remember, Japan's suffering, if you like, from a strong currency. That makes it harder to go up as a big exporting nation. The weekly chart here has looked very toppy for most of this year, actually, drifting after such strong moves. Here, the MACD crossed down back in March, and it's been negative ever since, and we've had lower highs in here. We can make all sorts of cases for different topping patterns here, high, higher high, lower high, but it all looks pretty heavy and vulnerable. It's moving down, and the ADX reading here is 24. So we've got a downtrend, and 24 is a reasonably strong downtrend, not as strong as 26 or 30 as we've got in the FTSE. But we've got these lower highs here. We've got this channeling going down here. This does look quite threatening to go down further. You know, it looks weak. It does look weak. So we've got a very clear message, haven't we, here? If you want to put them in order of attractiveness, I would say the Tech 100, S&P by far the most attractive. Then the DE30, then Japan, and then least of all, by a long shot, also FTSE. Okay. Did we get any questions, Dan?
Yes, actually, Trevor, yes, we did. Lionel, thank you very much for your question. You've already answered half of it, though. He says, what's your take on DAX, which you've already covered, I believe, and the US 100, which we covered the Tech 100, didn't we?
Yeah. Yeah, sorry, Dan, that was a good question, but I already did cover it. I hope the message was clear for you. But of the two, of course, I prefer the Tech 100, which I prefer of all of the indices that we're covering. And the Japan looks quite vulnerable, really. And that's weighed by that fact that that's the one currency which is actually stronger, a little bit stronger than the US dollar.
Oh no, sorry. I mean, he wanted to look at the US 100.
As opposed to the 500.
Oh, hang on.
Because the Nasdaq is 100.
One
There is
second.
an
Yeah,
S&P 500.
yeah, made a mistake. Yeah, sorry, my mistake.
Yeah.
My mistake.
Okay, sorry.
So we've got it
But we
covered now.
don't
Thank you.
It's only
Sorry.
the basic option. People
No,
don't
well,
trade the US 100.
okay. Thank you very much,
They
Trevor.
do the Nasdaq. Yeah.
Anything else to add, Trevor, or can we finish up for the day?
No, really. I hope we've got some clear messages. I was very fearful of a breakdown in the cryptocurrencies because of the descending triangles, but of course we hadn't broken out and we knew where the trigger levels were. They held and we gapped and broke to the upside. But clear message there of there is this much like most attractive of the three that we look at is clearly the Bitcoin, and Litecoin looks like being a very reluctant participant in that move. The dollar is still strong, and so this is making the situation quite threatening in the euro. And then watch out for the commodity currencies, the Australian dollar and the Canadian dollar. These cup and handle patterns can support big moves, and that's down for the currencies versus the dollar.
Okay.
So that is where you probably get the lead. You will get the lead, I should say.
Okay, well, thank you very much for attending, everyone. Please join us again the same time, same place next week. And don't forget that we're posting this webinar to our YouTube channel in a few hours or so time. So if you came later, you can watch from the beginning over there. And if you do so, please don't forget to subscribe to our channel and click on the bell to get notified. Okay, well, thank you very much, Trevor. Speak to you soon.
Yeah, I think we're in for a big week. I'm just watching here the euro. These are the pivot points, incidentally, here. So I do watch those on the intraday basis. But okay, but yeah, so watch out for the neckline of this head and shoulders. That's what I'm going to be fixated on, the behavior of the neckline. Can threaten like the Bitcoin and then go the other way. So we'll see.
Okay, well, thank you very much, Trevor, and I'll speak to you soon. Bye-bye, everyone.
Yes, indeed. Thanks, Dan. Thanks for hosting. Bye-bye. Bye, everybody. Bye-bye. Have a good week. May the trend be with you.
Bye-bye.
Bye-bye now.